Welcome to Market Briefs. Here's your daily market summary for May 14th, 2026. Stocks pushed quietly higher, but the real story today was Bitcoin breaking $82,000 on Senate progress for crypto market structure legislation. The S&P 500 added 0.75% to 7,500. The Nasdaq tacked on the same. The VIX dropped over 3.5% to 17.25. Quiet conviction, not panic. Under the surface, software and networking led. Cisco jumped over 13% on its earnings, with elevated volume confirming the move. Trucking names also ran hard. Knight-Swift rallied almost 14% on triple its usual volume, and J.B. Hunt rose 7%. When two heavy freight names move together on real volume, that's a real freight rotation, not noise. Bitcoin gained 2.5% and printed 82,000 intraday. The headline driver was the Senate Banking Committee clearing the Clarity Act, long-awaited crypto market structure legislation, and sending it to the full Senate. But underneath, the picture is more complicated. Spot Bitcoin ETFs saw nearly $3 billion in outflows 2 days ago. On-chain data shows almost 68,000 Bitcoin flowing onto exchanges over the past 7 days, which is selling pressure, not accumulation. CoinDesk reported today that this rally came without U.S. spot demand, meaning the buying came from offshore venues and the futures market. The fundamentals are bullish. Real interest rates are barely above zero, which historically supports Bitcoin, but the composition of this particular rally is fragile. The Fed's preferred inflation gauge, the year-over-year core personal consumption expenditures price index, ticked up to 3.2%. The Fed funds rate is sitting at 3.6%. That means the real Fed funds rate is just plus 44 basis points, barely restrictive. And here's the key. Core inflation went up while the Fed's rate stayed flat, which means policy is loosening in real terms, even though the Fed hasn't cut. We call this stealth easing. It's structurally supportive for risk assets and for Bitcoin. The market will be watching next Wednesday's FOMC minutes very closely to see if the committee is comfortable with this drift. This is a quiet but important signal. High-yield credit spreads sat flat. Investment-grade spreads tightened a bit. The Chicago Fed Financial Conditions Index reads loose. Nothing is stressing anywhere in credit. When stocks are this strong and credit is this calm at the same time, that historically supports continuation. The warning sign would be high-yield spreads suddenly widening, and we are not seeing that today. Gold fell about 0.8%. Silver got hit much harder, down 4.5%, its biggest single-day move in a while. The gold-to-silver ratio jumped almost 4%, which tells us this was silver-specific selling, not a broad precious metal shutdown. Silver miners followed. Hecla Mining lost 7.5%. The driver here is the 10-year real rate, which jumped over 12% on the week. When real rates rise, gold and silver lose. The framework worked exactly as expected. Oil firmed. West Texas added 1% to $102. Brent rose about 0.75%. The notable move was in the Brent to WTI premium, which collapsed by almost 45% in a single day to under $4. That premium had been signaling physical supply stress in global markets: diesel, jet fuel, fertilizer. Today's compression is relief. Worth watching whether this holds. The big one this week is Wednesday, May 20th. The Fed releases the minutes from its last meeting. Markets will be parsing every word for any sign of committee discomfort with how loose financial conditions have become. Also Wednesday, UK inflation data, which is expected to drop sharply from 3.3% to 2.6%. That print will move the British pound, which today was the weakest currency on the board. That's your Market Briefs daily summary. Like and subscribe for tomorrow's update. And remember, this content is for informational purposes only and is not financial advice.